Okay, I think we're on,
Ready to
Reece.
go.
So firstly, apologies everyone, so this is Chris Booth from Lydian HQ. We're doing a property coffee club on a monthly basis now, and the purpose of this is to start sharing some of the insights around what's happening in the property market. Obviously without property, there's no lending. It's a big asset class for our clients and our partners, and we're going to introduce a specialist on a regular basis to talk about property, what's happening in the market. And today I'm really pleased to invite Reece Marini from AllenWargent. So Reece and I have been friends for a wee while, and I've known 𝐿𝐻𝐻𝐻𝐻 who's the chair seat in that group for many years. The AllenWargent Group is a buyers agency group across New South Wales and Queensland. And Reece, I think his specialist knowledge would be sort of Central Coast and that sort of Newcastle market. But welcome today, Reece, and thanks for being the first pony up to practice on.
Good to be here, Boothy.
So yeah, jumping straight in. So the idea of the coffee club is to talk about what's happening in the property market. So the last 12 months was interesting, and for both buyers and sellers, to be honest. What did you see last year? Some key points last year, and what are some of the changes which you're seeing today in the conversations you're having with clients, but also people looking to sell the properties and buy properties?
Yeah, it was quite steady over the last 12 months. So we've purchased a number of properties for clients over that period of time, and it was somewhat easier in the early parts of 2025 in relation to securing good quality investment grade assets. That has become significantly more competitive as time went on. In that year, we saw a lot of individuals trying to front run the first home buyer scheme that was brought forward in October, so initially earmarked for January. That was brought forward in October. We had investment clients of ours, we had first home buyers and others in the market that were front running that particular scheme, because there's obviously a fair amount of demand, probably 2-3 years worth of demand that has been brought forward due to the first home buyer scheme. And since October, that has kicked up another gear as well. So we've seen prices, for example, in Mayfield, where we were securing assets for around $1.50, 1.1, those particular properties now are closer to 1.25, some of them 1.3, depending on location. So we've seen a significant jump in value for particular pockets that resonate with those first home buyers, investors, and some upgraders in those areas as well. That goes for other pockets across the Central Coast. So due to the fact...
Just in jumping in there, yeah, so that's interesting. So we've got, I suppose, that affordability for the investor around that kind of $1 million purchase price, because that's kind of almost like a comfort zone these days for investors. And then you've got your first home buyers who are fighting to get a first share in that property, and they've been forced into one bedroom apartments for $1 million too. Is that the reality of the situation?
Yeah, so if we look at it, and if we fast forward then from October, so it was competitive, but there were still opportunities in the market. We saw quite a strong jump, 5-10% in some regions over that period of time. In a very short period, prices jumped fairly considerably across those price points at around, let's say, 800 up to that 1.25, 1.3 mark. And then coming into the new year, we've seen a lot of individuals that are being pushed out of those particular pockets for the detached dwellings into lower density options. So townhouses, apartments, and that market is performing quite strongly. So there's been a significant amount of growth in those particular markets over the last 6 to 12 months. So that affordability constraints are now pushing people into those lower density options. So we've missed out on a couple of properties for a particular client over the last month, thereabouts. We've missed out on 2 properties where we initially valued those assets at around $750, $760 for one of those particular assets, and the price points, because a lot of those first home buyers and investors are now being priced out of those other detached opportunities, are all being pushed into the lower density options. So we're now seeing that value gap narrow between those lower density options and those detached houses, and we've seen quite a strong growth even over the last month in those lower density options, where we've seen properties that we thought were probably around 780, 790 have now jumped into the early 8s.
Well, yeah, so very frustrating for a lot of people, really. So, if you're trying to get a foothold in a property, lack of supply, high demand, lots of special offers from the government, and then secondly, if you're that investor trying to seek for that ideal property, tough going if you're in that sort of $1 million space. And interestingly, a couple of our clients are, some of our more mature clients, those sort of clients in retirement stages looking to downsize. They're looking to sell, significant properties, sort of $3-4 million assets, cash up a bit, and also get into that sort of smaller dwelling as well, which is also compounding that frustrations.
Agree, and we're seeing that a fair bit on the market. If we look at the Central Coast, for example, at the moment, we've got a number of individuals, those that are closer to retirement, that are selling up for those price points around that $3-5 million mark across areas like Killcare Heights, McMaster's Beach, north of Oka. They're quite hilly suburbs. They have great outlooks, ocean views, etc. However, they aren't conducive with those retirees in those particular markets.
So drains the electric battery in your wheelchair getting up and down the hills.
That's right. You need to throw in an elevator for 30 grand. So we're seeing a lot of those individuals divest of those family homes that they've probably held on to for 20 or 30 years, and they're moving into those flatter suburbs across the Central Coast. So if you look at South Yamina, quality pockets of Yamina Beach, Edlong, Booker Bay, they're all moving down into those particular pockets. So to your point, not only do we have investor demand in that range of, let's say, $1 million up to 1.5, we've got first home buyers playing in that same space because the first home buyer scheme has changed. The cap was lifted up to 1.5. There's no cap on incomes for individuals participating in those schemes. And now we've got the downsizers that have come probably back in the last 6 months from what we've seen, because we're supporting a number of these individuals as well. They're downsizing out of those suburbs that I've outlined, and they're pushing into those same pockets that those other individuals are. So you've got 3 or 4 different demographics competing for the same assets.
Following on from that sort of, I suppose, higher end property, talking about the segments in the market. So we've talked about that, that, I suppose, lower cost price, even though it's crazy, it's almost like $1 million cost price. Yeah. What about some of the more premium properties in the market? What's what's the sentiment in that space? How's that going?
It's not as competitive. Good quality assets are still moving relatively quickly. So we've got absolute waterfront properties that are still where individuals are seeing value. They're moving relatively quickly. However, there is still value in those particular pockets. So if you look at the Central Coast in particular, that price point of, let's say, 2.5 to up to 5 million, there is still value in that particular segment at the moment. So it's not moving as quickly. There's a bit less turnover. There's some good quality assets on the market in that price point. So there is some opportunities in that market at the moment. For example, there was one that sold in Wagstaff, and this sold back 2021. A couple of billionaires that competed over that particular property ended up being the highest sale price for that particular pocket of the Central Coast, sold for 16 million. They've recently slashed the price on that particular property. Well, slashed, it's a couple of $1 million off the top. They're now only seeking around 14 million compared to the 16 in which they paid for that particular property. Now that was overs at the time, but when you get a couple of billionaires competing for the same property and one wants it, I guess they pay up to get it.
They pay the price, yeah. That conversation around affordability for that price, I mean, so you've got a lot of people who are in that sort of, $2.5 million property, potentially looking for an upgrade, but to get into that sort of $3.5-4 million property, and with the credit conditions as they are definitely tightening. The interest rates going up will compound that problem with the assessment gap, and that means affordability to sort of step up and borrow that those larger amounts is going to get constrained again.
But, I just think, just to that point, I think contradictory to many beliefs out in the market with the conversations that we're having with clients at the moment in relation to will the interest rate rise. We've had one, maybe there's another one in the pipeline. That hasn't affected the price point. Typically sub 1 million from what we're seeing at the moment. It has had no impact whatsoever. It is still very competitive since we've seen that interest rate increase at that price point. I think there's many people in the market at the moment where they're obviously maybe coming up towards the 90 days of those pre-approvals, and they realise that if it rolls into another and they're purchasing around that $1 million mark, then there's probably 15 to 20 grand coming off the top of their borrowing capacity, and if we're likely to see another one, maybe there's another 15 or 20 that comes off the top. So we're seeing a lot of people in market at the moment especially those first home buyers that are looking to get deals done quite quickly. So I don't think the interest rate increase is going to impact that price point sub 1.5 across Central Coast and Newcastle at the moment, because of the amount of individuals and the different demographics competing for the same assets. The investors, the first home buyers, the downgraders are all looking in that market segment at the moment.
Good insights. And I think, on that point about the RBA, my take on it the other day was really the easing last year probably went a little bit too far, a little bit too quick, and that 25 points sort of takes the edge off it. I think the rhetoric by the RBA post in the comments was it was a one step. It doesn't mean that the sentiment has actually changed to increase interest rates right now. I think realistically we are looking at what the true sentiment of our domestic economy is. The GDP figure was pretty ordinary the other day, and the forecast for that. So I think for my take on it, we're on hold this year for the rest of the year, but I got it wrong in February. So,
Mug's game trying to predict interest rate rises and falls. I think Pete spoke about it a little bit last week and outlined some of this in his blog over the last couple of weeks, is that globally inflation is on the way down, although we've seen, at least domestically, inflation being a little bit sticky and above the range in which the RBA sees as viable for the next period of time. However, globally it is coming down, so expectations over the next period of time, although we might not see interest rates down anytime soon, I don't think that we're going to see considerable hikes moving forward, to your point.
Yeah, and I think importantly, map out what your cash flow, your strategy is. Assessment from the lenders is, materially higher, so affordability is certainly demonstrated in those pre-approvals. So, credit stress for people purchasing right now, if they've gone through the proper process with a broker, I don't think it impacts them too much, but certainly, watch this space and have good professionals in your team right now to give you that advice. I would recommend certainly having a buyer's agent service when searching, because the elements of that where you can save money on the purchase price, there's a lot of negotiation and things goes in. The hand-holding part of your services is really important and vital, especially for investors who are looking at areas which they don't know intimately. And the second one I would say for that is, a mortgage broker can help with that sort of cash flow budgeting. And lastly, make sure you get the advice around, protecting your assets, things like life insurance, getting your budget cash flow in place. A financial planner is a good thing as well. And this is going out to our financial planning community, so we definitely support having, professional chairs in your world. The last thing I would just ask, just a quick one. We saw the other day that the government running into the new budget, they're looking to propose some changes to property owners and the taxation around that. How do you see that right now? Do you think it's a good thing, a bad thing, or are you sort of waiting to see right now, Reece?
Waiting to see at the moment, I think, to just get a bit more of an understanding of what the broader policy is around those changes to the tax. Now, in saying that, I think their position is that the change of that tax is going to provide more affordable properties in the market. I just don't think that that's the case. That's not the issue that we have in Australia in relation to that one aspect of capital gains tax playing a significant part in any more supply coming to market. The biggest issue that we have at the moment is that we've had significant immigration over the last 20 years. We've gone from something around that 21 million mark 20 odd years ago. There's been 7 million individuals that have now come into this country, and we have not kept up or even close to keeping up with the supply that's necessary to house all of those individuals. And that's the biggest consideration that needs to be taken into consideration, which is we just have such an undersupply at the moment for housing in this country to support the significant immigration that we've seen over the last 20 years.
Yeah, and I suppose that's a good comment. I think that single shot that the government are trying to make around that investor property tax, I think it's quite short-sighted. I think there needs to be a whole review of this, the property undersupply, property access, price point of property, and then have a number of a number of insights and implement tax and changes in tax and legislation to support that. That's it's interesting. Anyway,
if you're going to have just on that point, if there's going to be changes to the CGT tax and you're going to have less property investors in the market, then you're going to reduce supply significantly when it comes to those that are looking for rentals. And we already have a rental crisis in this country, so that'll only be exacerbated by that point if we've got less investors in the market looking to secure those types of assets. And build to rent wouldn't be keeping pace or anywhere near keeping pace to support those if we're going to pull those investors out of the market.
One thing I would say about your area of the community in New South Wales, there are a lot of land releases around there, so hopefully there's some release of that sort of bubble and valve for people looking to buy, I suppose, house and land packages in good areas up in the the Hunter Central Coast area. I suppose they are still expensive as well. Yeah.
Yes.
Cool. All right, Reece. Well, yeah, thanks for today, and thanks for being the first off the rank in the Property Coffee Club with me. Do you have any final says for potentially the audience?
Something we talk to our clients about all the time, and you touched on this just briefly prior, is you should invest when your circumstances allow. Ignore all other indicators in the market, whether it be interest rates going up or down. There will always be noise in the market, which tends to deter people from investing. Invest when your circumstances allow, and not any sooner or later than that.
Excellent. All right. Well, Reece, thanks very much for joining us. Please send my regards to Pete and the team at AllenWargent. I'll send you a copy of it so we can be the pin-up boys in socials. But
appreciate it.
Anyway, have a great day.
Cheers, Bethy.
Thanks, man.